We're down over 16%.
Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
The NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go.
We're just every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance.
What started in America last year has now spread to every part of the world.
On January the 3rd, 17 years ago, Satoshi Nakamoto mined the Bitcoin Genesis block. In that block, he left a message: Chancellor on brink of second bailout for banks. It was a warning encoded into the blockchain itself. A warning about the world Bitcoin was created to escape. But now, all these years later,
we have to ask ourselves the hard question: did Bitcoin really succeed? Or have we become the thing we were built to overthrow?
Bitcoin was born from opposition. It was created as a response to institutional failure, to the idea that banks and governments should control our money.
So Bitcoin was meant to be money. No intermediaries, no banks, no institutions, just pure mathematics, an electronic peer-to-peer cash. And for a long time that is what Bitcoin was, but can we still say the same for today?
I don't like the idea, honestly, that Bitcoin would be used by people that are just buying stuff on an everyday basis. And I mean, the reason for that is simple. I mean, think about it. When you buy something, when you go spend fiat, right? If you go to the store and buy coffee or whatever it is people buy, you know, you're spending something that you know for a fact the thing you're spending will be worth less tomorrow than it is today, right? Like, you know the purchasing power is going to go down. Therefore, you're incentivized to spend it. With Bitcoin, the reason why most people don't spend it on like everyday items is because there's this expectation that it will be worth more tomorrow than it is today. So I think it's going to always struggle with the, you know, trying to fit into the narrative of like a peer-to-peer currency that people are going to use every single day.
But money is more than just a medium of exchange. Money is energy stored to be spent at a future date. It's potential energy. Money represents work you've done in the past that you're choosing to deploy in the future. And that's what Bitcoin is at its core. It's quantifiable, it's divisible, it's a storable form of energy. That's why it has value, because it works as money.
In 2010, someone bought pizza, just two pretty standard pizzas. But this was the first real time we'd seen Bitcoin used as Satoshi intended it to be used for, as a currency. Now, at the time, Bitcoin was worth just a fraction of a penny, so 10,000 Bitcoin for a couple of pizzas seemed like a fairly decent deal, but this marked the first time in history that we saw Bitcoin being used, and unfortunately there were some consequences because of that. What originally seemed pretty unremarkable is now a pretty legendary transaction, because those pizzas, if we look back now, are worth... And the thing is, no one wants to be the new Bitcoin pizza guy.
If someone did that transaction today, it would be considered financial suicide. Not technically, I suppose. Bitcoin's code hasn't changed all that much. You could still send 10,000 Bitcoin to someone or to buy something, but the incentive structure is completely different, and incentive structures maybe matter more than the code itself. The data is clear and the Bitcoin transactions are getting larger and less frequent. We've gone from frequent small transactions, money being used, to infrequent large transactions, which is value being stored.
You see, we'll never find more Bitcoin on an asteroid to mine. We'll never find a deposit deep underground. We can't dilute it like shares in a company. Bitcoin is the first time we've ever had genuine, true scarcity.
Satoshi built in a hard cap. 21 million Bitcoin. This was intentional design. However, Satoshi may not have fully anticipated what true scarcity does to monetary behavior.
I mean, I don't really think Satoshi, when he designed it, necessarily meant for it to be exactly what it has become. But I also, I don't think that I could ever look at like my Bitcoin and think, oh, I want to use this to buy groceries, right? Like that's not what it's for. It's more of a way to preserve wealth over many, many years.
Gold teaches us something important. Gold has been mined for thousands of years and its inflation rate is incredibly low. And do you know what happened? As gold became scarcer and more expensive, people stopped using it as money. It moved from currency to vault. And we're watching the same evolution happen to Bitcoin. People respond rationally to scarcity. They stop spending it, they hoard it, they vault it. And this is just basic supply and demand economics. But Bitcoin takes this one step further because Bitcoin forced this evolution mathematically. The hard cap means diminishing inflation is guaranteed. It's not a choice or a possibility. It's a certainty coded into the network, into the protocol. And when you guarantee a diminishing inflationary rate, you guarantee that spending Bitcoin becomes economically irrational over time. You're not making a transaction, you're burning wealth. You're sacrificing future purchasing power for present consumption. With each halving makes new Bitcoin creation smaller, the incentive to hold even stronger, and the temptation to spend considerably weaker. Something that sits quietly and does nothing, representing wealth that you're afraid to deploy.
So we have to ask, is this as sustainable as a peer-to-peer electronic cash system? And will we eventually return to what was initially intended for Bitcoin?
I think everyone has their own definition of what Bitcoin is. The same way that you could give a space alien a definition of what cash is. A space alien might look at a piece of paper bill and say it's toilet paper. Everyone can have their own silly little definitions. I would go with what is the most widely accepted definition of Bitcoin, which is that it's money. It's only very recently that people have been trying to describe it as an asset or digital gold and all that stuff. The only definition of Bitcoin that has been there since 2009 has been money, peer-to-peer electronic cash.
One thing we do have to remember is Bitcoin is still very much in its infancy, only 17 years of age. And what took gold a millennia to accomplish, Bitcoin is now doing in months. And while it will take another 100 or so years to actually mine that last block containing a satoshi as block subsidy, we're still an evolving asset.
It's a software, it's evolving, and it's evolved into what we need it to be.
The most perfect money that the world's created. Right now, it trades as a risk-on asset because it's young. It's only, 16, 17 years old. For it to be money, it needs to be around a little bit longer, like gold's 6,000 years old. It also needs to be bigger, not even 2 trillion right now. Gold's 20 trillion, 30 trillion, it keeps getting bigger, right? So it needs to get 10 times bigger, probably the size of a US dollar M2. So we're in a 20 to 30 trillion dollars. Needs to get 10 times bigger. And then, it'll take some time. So we're talking decades.
From a fraction of a penny to $1 trillion market cap, Bitcoin still allows billions of dollars to be transacted pseudonymously, almost at no cost and practically instantly. It still proves ownership, it still enables wealth transfer without intermediaries. Even if the usage and psychology of this money have altered, the fundamental capabilities remain.
I don't get Tesla stock every 2 weeks. I don't get gold every 2 weeks. I don't use gold and Tesla stock to go buy my groceries, but I use Bitcoin to do it. So for me, it's money. Everyone else has different use cases for Bitcoin. Everyone's been trying to make a buck. Every cycle you get people trying to make a buck off of Bitcoin and pitch it as the next big thing. But honestly, I actually feel that we're getting closer and closer and closer to the real truth of Bitcoin, which is that it's money.
We've gone from a post-2008 global financial crisis to a post-pandemic, politically crazy, AI and quantum computing world. And still, Bitcoin is within its infancy. So we come back to where we started. Satoshi created money designed to oppose institutions. Bitcoin's transformation from currency to asset isn't a failure of the protocol. It's a success of the market discovering Bitcoin's actual value proposition. The protocol does what it was designed to do, but we've collectively decided to use it different than maybe Satoshi initially imagined. Over the next 5 episodes, we're going to explore what Bitcoin is actually becoming. We're going to dig into mining, governance, privacy, existential threats, and all the other hurdles Bitcoin is going to have to overcome to really fulfill its potential as this true asset, this store of value, this electronic peer-to-peer currency, whatever we need Bitcoin to be. And we're going to try and answer the ultimate question. In 2140, when the last Satoshi enters circulation, what will we have created? What will Bitcoin be? Will it be anything like Satoshi imagined? Will it be a settlement layer or an information protocol? Truly, we don't know. I guess before we can answer that question, we need to make sure that Bitcoin can actually get there in the first place.
Right now, a Bitcoin transaction is happening. Many of them are. But the fundamental question is this purely monetary information being sent? Or is Bitcoin more than that? Are we now a network of information, an immutable blockchain of whatever we want Bitcoin to be?
This distinction matters because Bitcoin initially was intended to be an electronic peer-to-peer cash, but increasingly, Bitcoin is becoming something else entirely.
What is Bitcoin? Is it an immutable ledger of monetary transactions? Is it purely a money? Is it a store of value asset? Is it a settlement layer? Is it none of these things? Is it all of these things?
And it also raises a big question of whether Bitcoin can survive this potential identity crisis. Bitcoin is fundamentally purely information. It's not coins, it's not currency, it's information, it's data. When you send Bitcoin, you're not physically moving any objects across the space, you're moving data, strings of numbers and letters. A UTXO from one address to the other. That's the entire mechanism, information transfer. But because that information represents stored energy and value, we call it money.
Ultimately, Bitcoin is what you use it for. And because Bitcoin is a protocol, because Bitcoin has a limited programming language, and it has the ability to store data, it can be used for a wide variety of things. And this is one of the aspects of Bitcoin that has become quite contentious. I mean, it's been contentious for about a decade, but even more so over the past year or two.
Bitcoin's white paper opens with a peer-to-peer electronic cash system. So the intent was clear. Bitcoin was supposed to be about moving monetary information, value transfer. But here's the thing. Bitcoin has never been restricted to monetary information. It's always allowed for transactions that may not be deemed monetary to be included. Messages, data, information that has nothing to do with financial value. Bitcoin's protocol doesn't discriminate, it simply records information. For years this wasn't controversial, but recently we've seen more and more non-monetary data being stored on Bitcoin. Whether that's JPEGs, videos, websites, or other unrelated data, they've been added to this immutable permanent record of the Bitcoin blockchain. Now, some people are celebrating this. They say Bitcoin is uncensorable, it is preserved information, and this is what Bitcoin is for.
People should be free to do whatever they want, and you can cry about it if you want, but you can't stop them, so why bother crying about it, right? It's not my job to tell people what Bitcoin is or should be. We've seen the narratives around it evolve for the entire 15 years of its existence, and I anticipate that continuing. I think that at the core, anyone who's a Bitcoiner should be a libertarian and believe in freedom and believe that the best use cases will be determined by the market.
But others are calling this spam. It's not what Bitcoin is supposed to be, and it's bloating the blockchain with useless data. And suddenly we had this identity crisis, because the question wasn't really about the images that were being included on the blockchain. The question was fundamentally, what is Bitcoin for? Is Bitcoin just a money system, a payment network designed specifically for financial transactions? Or is Bitcoin a system for storing any information permanently? An immutable ledger of whatever free market capitalism wants to be included within each block. A universal database that cannot be censored, corrupted, or controlled by any single entity.
I mean, it's free market in the same way that is a dollar bill the best place to put a canvas for information? It's money. Like, if you want to use a dollar bill instead of buying sheets of paper from, the art store to do your art, you can do that. The government doesn't like it when you do that. They say that you're defacing the bill. But as far as I'm concerned, I would be more concerned if it posed a real threat to the network. I don't believe it does. I believe that the way that Bitcoin is set up to handle arbitrary data and OP returns and all this stuff, there is possibility that it can be abused, but it's very costly. And that's always been the point, is that if you want to do this type of stuff, spamming the network, that's what proof of work is all about. You got to pay your price. I haven't seen sufficient evidence over the long term that, number one, that's that costly to the network, to everyone else using the network. And number two, I haven't seen sufficient evidence that participating in this stuff as a node like opens you up to legal liability, which also is not something that we should be optimizing the protocol in the first place. Laws can change for whatever reason, right? There's this big conversation this year, especially around, we need to do a fork, or we need to do a different version of the node software because people are going to be putting, dangerous or explicit images into OP returns. If that's the case, you're optimizing for the government telling you what is and what isn't legal, right? And the government can decide tomorrow that any transaction is illegal, and you as a node, whether it's an image of someone in an 80 kilobyte file or it's a transaction going out to a terrorist, is illegal. The whole point of Bitcoin is you're going to have to be comfortable with one day, if you want to be a participant in the network, the government coming to you and telling you what you're doing is illegal. It flies in the very face of the power mechanism that they've had for the last 3,000 years, which is a monopoly on money. So they'll come up with any excuse to make it illegal. So as cypherpunks, I don't think that we need to optimize for whatever the government thinks is good or bad. We need to optimize what is good for the health of the users on the network. And personally, I just don't see the spam issue as something that really endangers all the other participants.
Well, this isn't the first time Bitcoin's had an identity crisis. We've been here before.
All the way back in 2015, Bitcoin faced a genuine philosophical split. Some developers and miners said that Bitcoin blocks should be bigger to fit more and more transactions on-chain. Bitcoin becomes money for everyone, and it can truly scale to thousands of transactions per second, just like a Visa or MasterCard. But many people oppose this. We wanted to keep the block small. We wanted to stay decentralized. We wanted to use other layers for transactions and incentivize more development for other scaling solutions. Bitcoin's job was security and finality, not necessarily purely about transaction speed. Now, these positions were incompatible. Neither side were willing to compromise, so Bitcoin pretty much fractured. And emerging from this, we saw Bitcoin Cash, the big block vision and alternative to Bitcoin, as Bitcoin remained this small block network.
If you look at the engineering behind it, it's not designed to scale to 8 billion people, 42,000 transactions a second, which is VisaNet. It's not a payments network at the base layer. It's for settlement, and it's really a sovereign store of value, which is like gold. And that's first and foremost. And then we can talk about payments once we get enough adoption and the higher layers above Bitcoin.
Ultimately, the people decided what should happen with Bitcoin. They chose the Bitcoin we know and love today. And as much as we quibble and dispute what Bitcoin is, ultimately, it's up to us.
Not just the technology, but the decisions we make on what Bitcoin is meant to be.
No one can force you to follow any process, and that's half of the fun, I would say, of this anarchic system. Because anything that you do create is most likely going to just be more centralized, and we've seen this happen. Like in the previous forks back in 2017, 2018, ultimately anyone is free to do whatever they want, to run whatever code they want, try to enforce whatever governance they want. And so like in 2017, with the hard fork, really what we saw a group of people who said, we believe that the miners should be like the primary governance body of Bitcoin. And if that's what you want, you can do that, and you can change the code, and you can create your own fork of the network, and you can give more power to one group of entities over another. But I think that the wider Bitcoin ecosystem in general will reject that and just continue along the way that it has so far. It's a messy system, but anarchy in general is messy.
Bitcoin was built for censorship resistance. That was pretty much the entire point. Nobody can stop your transactions, nobody can reverse it, nobody can prevent you from using Bitcoin. But this censorship resistance is a double-edged sword. If Bitcoin is designed to be censorship resistant, then everything can be stored on Bitcoin. Money, images, videos, databases, political manifestos, whatever anyone may want. Which sounds good. Bitcoin becomes a universal, uncensorable archive. But this creates a little bit of a paradox, because if everything can be stored on Bitcoin, then running a Bitcoin node becomes very impractical and not viable for a vast majority of users. You're not just storing small financial transactions anymore. So if fewer people run nodes, Bitcoin again becomes more centralized. So censorship again becomes easier. So it's a bit of a lose-lose scenario for Bitcoin, unfortunately. We have to choose what we're willing to trade off.
You know, it's not really a storage network. There's better ways to do that. And so, yeah, to me, it's a monetary layer. The first layer is store of value. Medium of exchange, it's great to do that. I think the ultimate use of medium of exchange is to protect the basic, store of value, the self-custody of it. If you think of, to put that really clearly, gold was money for, say, 6,000 years. It ceased to be money when we started to trade paper, around the gold, and the gold got centralized under custody. And so at that point, you could rug the gold, and then you're just trading paper and you've got fiat. So the point of having medium of exchange is it actually provides protection against the base layer being custody, and you're just trading paper around it.
So here's what becomes crucial for Bitcoin's future. Bitcoin's decentralization relies on these node operators. They're verifying every transaction, they're checking every rule and maintaining a complete copy of Bitcoin's history. Nodes are what make Bitcoin decentralized. If you want to verify Bitcoin yourself and not trust what anyone is telling you, then you can do so. But the economic incentive for running nodes has always been unclear. Miners at least have incentives. They earn block rewards and fees, and users of course have incentives. They can validate their own transactions, and people can watch their wealth hopefully grow and use Bitcoin as a peer-to-peer currency. But for someone just running a node out of belief in Bitcoin's decentralization, that's pure altruistic voluntary decision making. So this is a long-term threat. Bitcoin's decentralization depends on regular people being willing to verify the network for free. But human nature unfortunately doesn't work that way.
I have long-term questions about just human organization in general, and like, is Bitcoin ultimately doomed to follow the same sort of human organization patterns that have occurred throughout history, which is centralization via specialization and outsourcing major aspects of your life to trusted third parties. So this is what I've been fighting against for 10 years just on the custody side, because it's quite obvious that the straightforward, simple, convenient thing for people to do is to just purchase some Bitcoin IOUs with a custodian and let them handle all of the security aspects. But if a sufficiently large amount of the Bitcoin ecosystem decides to go that path, of course, that creates massive centralization and systemic risk and fragility to Bitcoin over the long term, and potential governance issues as well. It's going to be, this is one of the reasons why I think it's a grand experiment in sort of crypto anarchy governance is, will the system manage to remain cohesive and moving in one direction? I'm sure there will continue to be forks for a variety of reasons, much like how, religions have forks and even countries sometimes split and have forks. But as long as there remains like a sufficiently large number of people who are not apathetic and they care enough to contribute, then I think that something that we know as Bitcoin will continue to exist. If you believe that Bitcoin is anti-fragile, And I think that that's what a lot of the recent controversy really comes down to, is either believing that Bitcoin is anti-fragile and it'll just work out one way or another, or believing that Bitcoin is fragile enough that, you know, one or two things can potentially kill it.
This brings us to another fundamental issue about Bitcoin's identity and governance and development. Is it's not just about the code, it's about keeping everyone at least partially happy. It's about compromise. Users want cheap transactions, node operators want a small blockchain, developers want an easy base to build upon, and miners are businesses who need economic incentives to continue to secure Bitcoin. The block size wars didn't resolve this debate. The spam and ordinals and inscriptions debate, again, didn't resolve what Bitcoin should be. And the current censorship resistance paradox also won't fully resolve what Bitcoin is or will be. Bitcoin's white paper said peer-to-peer electronic cash system, but the reality is significantly more complex. Bitcoin is information. It's an uncensored ledger, but it's also a scarce asset. It's a settlement layer to be developed on, but it's also a store of value in its own right.
The best thing about it is we get to choose. We get to decide what Bitcoin is best for. And I think arguing about this is just causing more problems than it's solving.
Right now, all around the world, Bitcoin miners are working, competing with thousands of others for the same reward. But over the past 16 years, Bitcoin mining has changed considerably, and it's probably going to change a hell of a lot more in the not too distant future.
You see, when people first started mining Bitcoin, it wasn't necessarily for financial gain. You'd mine Bitcoin for a few dollars of electricity, and Bitcoin was worth a few pennies at the time. It didn't make economic sense to do so, but people believed in the technology and they believed what Bitcoin really stood for. Whereas now, it's not like that. There's not so many altruistic participants on the network, not so many people purely invested, not just in terms of their money, but in terms of their resources, their effort in Bitcoin because of what it stands for. People now are almost entirely focused on how much richer it can make them.
So let's start with a little bit of history. In the early days, Bitcoin mining was decentralized by default. Everyone had a laptop or a desktop computer, you ran the Bitcoin software, and you mined Bitcoin.
Back in 2009, if you could have ran this tiny 1-watt USB Bitcoin miner, which only outputs around 55 kilohashes or 55,000 hashes per second, when the block difficulty was just 1 as it was until late December 2009, and the network hash rate mathematically required about 7.17 mega hashes or million hashes, you'd have contributed a fairly competitive 0.77% of the total network hash rate, which, given an average of 144 blocks per day at 10-minute intervals, would have resulted in you mining around 1.1 blocks per day, or approximately 55 BTC given the block reward at the time, which at today's roughly $100,000 per Bitcoin would have netted you around $5.5 million per day if you'd have held. Not bad from a miner you could easily power from some casual cycling at least 50 times over.
As Bitcoin became more and more valuable, Bitcoin mining became more competitive. So those that wanted to mine increased their computational output, the difficulty increased, and suddenly everyday laptops weren't really competitive anymore. So to compete with these individuals willing to pour resources into massively expanding their operations, mining pools were created. So the idea was good. Instead of competing alone, these small miners could band together their computing power to compete for blocks as a collective. When the pool found a block, everyone in the pool shared the reward. And it seemed like at the time that this would prevent centralization. Small miners working together would compete with these big corporations who had the resources to expand. But something unexpected happened. These pools consolidated further and further and further, and we can see that today just 2 pools frequently control over 50% of the total Bitcoin hash rate, which is unbelievable concentration. Mining went from anyone can do it to industrial operations with millions of dollars, all centralized in just a handful of pools. Now this makes sense. Bitcoin's economics changed. Mining became very expensive, and to have any chance of mining profitability, you likely need unbelievably cheap electricity or huge economies of scale. Bitcoin is a multi-trillion-dollar asset class, with companies filing for IPOs based on their mining operations. Countries are competing on a nation state to be the mining capitals of the world, and Bitcoin mining became a race for billions of dollars of profit.
To me, it's the most existential threat to Bitcoin is mining centralization, because essentially, as Bitcoiners and people understand the mining space, we can all agree on that mining will end up wherever there is the cheapest nominal electricity. And so when we look at where can we get the cheapest electricity, it trends towards waste electricity, methane plants that are needing to just convert that into something rather than expel it into the atmosphere. There's good potential there, but the cheapest form of electricity, I think in like 50 to 60 years, that will be a viable way to mine Bitcoin will probably be nuclear. And we are very quickly shutting ourselves out of that game. What I think is going to be really important over the next few years and decades is that lottery mining, the average Bitcoiner mining takes a lot of that load off. Because if we're going to just trust massive warehouses to do all the mining for Bitcoin over the next like 20, 40, 50 years, we're cooked. We're absolutely cooked, because these things are just going to trend towards essentially the jurisdictions that have the cheapest energy. And then essentially you do have the possibility of a 51% attack over time if that continues. You can even look at the mining pools today. It's like 2 or 3 mining pools control all the electricity, control all the mining for Bitcoin. Let's just say all the hash rate is within those pools, and you can move in and out of these pools. But you can't move in and out of these pools. And I learned this recently, that a lot of these mining pools, they sign long-term contracts with miners so that they have to direct their hash rate to these pools. And so these mining pools have a lot of say over the long term. And again, it's just very important that Bitcoiners become aware, just like they have with running nodes, that running a miner is part of your duty if you are really concerned or care about decentralizing the network.
The reality is economics beats philosophy every time. Bitcoin security depends on these miners, but these miners exist because mining is profitable to do. That's not a cynical thing to say, it's just how incentives work. When mining was unprofitable, people mined Bitcoin out of a belief, but belief alone doesn't pay the electricity bills. Those believers eventually were priced out of doing so.
We've seen Bitcoin miners very quickly rebranded as data centers, which are talking about AI because it's the hot thing. But reasonably, I mean, it does make sense that they would utilize their equipment to maximize profits.
Some centralization in mining is inevitable and perhaps even a healthy thing. Industrial operations are more reliable, more secure, more efficient, and this competition is good for Bitcoin's security. But this extreme centralization creates a new problem entirely. It threatens Bitcoin's independence. Bitcoin was created to be decentralized, to have no single point of failure, and to be resistant to political control. But if mining becomes so centralized that a few companies or single nation states control most of the hash rate, then Bitcoin becomes politically vulnerable. And this isn't theoretical. In 2021, China banned Bitcoin mining, and immediately the hash rate dropped. Now, of course, every 2016 blocks, which is roughly every 2 weeks, Bitcoin recalculates its mining difficulty. So if we do see more or less miners joining or leaving the network, then we see this difficulty increase or decrease to ensure that blocks continue to come in at a fairly consistent 10-minute average. There is also a growing concern given the fact that Bitcoin mining relies incredibly heavily on the availability of cheap electricity. Sure, the mining equipment is expensive, but the vast majority of costs to a miner is electrical costs. Now, there may be a concern as well that electrical costs could be considerably cheaper in smaller and smaller regions around the world. We've already seen huge spikes in many places due to the demand for AI, for example, resulting in higher electrical prices, which pushes miners to those places where maybe electrical costs are considerably cheaper. But then again, we get geographical centralization within the mining network. If a majority of the mining equipment itself is situated within one jurisdiction, then suddenly one political party may have a huge amount of influence and control over Bitcoin mining.
I'd say the biggest threat to Bitcoin, I'm not an engineer, I'm not Bitcoin Core, but would be a 51% attack, some sort of nation state attack. I'm not saying it's possible, so I don't want to reflect that. I don't know, but something unforeseen that actually put the network in question would be the biggest threat. Whether that's possible or not is to much smarter brains than my own. Yeah, I mean, like if you saw a 51% attack on the network, I think that would pretty much the end game for Bitcoin.
Now, there is the game theory argument of why Bitcoin would never be susceptible to a 51% attack. Why would a nation state or large player spend billions or even trillions of dollars attacking Bitcoin when they could just compete to mine Bitcoin themselves? Why destroy the network when you could profit from controlling it? However, this game theory only really works if Bitcoin mining remains profitable. But what happens when that economic incentive, Bitcoin's own underlying mathematics, start working against these miners? Bitcoin's block subsidy, or the amount of Bitcoin paid to miners for securing the network, was designed to decrease over time. In 2009, for example, miners got 50 Bitcoin per block, and every 210,000 blocks, or every 4 years roughly, that subsidy cuts in half. So we went from 50 to 25, 12.5, and we're currently at 3.125 Bitcoin per block. And in 2028, roughly, it will drop again by 50% until 2140, when this will reach zero. Now, the problem is around 99% of the revenue for these miners comes in the form of block subsidies.
So if miners want to retain the same revenue that they currently are, then in 6-7 halving time, the Bitcoin market cap is going to have to be hundreds of trillions of dollars just to maintain where we are today, unless transaction fees or volume massively increases.
And while we occasionally do see spikes where the fees massively increase and potentially even exceed the subsidy, the baseline is still very much subsidy dependent. And by 2140, when the block subsidy is zero, miners must be paid entirely by transaction fees. But as we discussed previously, fewer and fewer people are actually using Bitcoin on chain, therefore the revenue from these transaction fees has continued to diminish.
It turns out that you really need the blocks to be at 95% filled for the mining revenue to be sufficient when the subsidy drops to zero out to 2140, right? So and if you were to look at the data we had in 2017 when everything was congested, that was kind of a really good test, because I knew then if you get those blocks 95% filled, you're most likely going to be great.
Bitcoin's success at being a store of value asset makes it unlikely that will generate significant transaction fees needed to sustain mining long term. The more Bitcoin succeeds at being scarce money, the harder it becomes for Bitcoin to scale and sustain its security with diminishing fees. And again, this works in a feedback loop. If we see less and less economic incentive for these miners, then this centralization we discussed previously probably becomes even more of a problem. Suddenly 51% attacks become a real concern. We also need to acknowledge that as this mining becomes more centralized, these large institutional miners can choose what transactions are included in each of these blocks, effectively dictating the censorship and dictating what information and data and money is allowed to be transferred across Bitcoin.
So we're back to where we started. The network relies on miners, miners rely on profitability, and the longer Bitcoin exists, the more that profitability becomes dubious. Nobody's using Bitcoin. The fees aren't sustainable. So is this a fundamental flaw that we need to address, or is this something that will inevitably resolve itself? Bitcoin has evolved massively. One thing we have to remember is Bitcoin isn't some fixed asset. We're talking about something that's alive. It's software. It's adapting, changing, improving all the time to whatever we want Bitcoin to be, whatever we need Bitcoin to be. But as we've grown from a tiny asset of less than a penny to a multi-trillion-dollar asset class, we need to acknowledge that this development process takes time. And as the world around us is changing, adapting, advancing,
Bitcoin is moving at one speed, the world is moving at another speed, and that gap is widening. Bitcoin's governance process, if you can even call it that, is careful, security conscious, and deliberately slow, but the world outside of Bitcoin is accelerating. Bitcoin is staying at its deliberate, careful pace while we're seeing artificial intelligence improvements on a weekly basis. We're seeing quantum computing capabilities accelerate to the upside at an exponential rate. Now, the slower Bitcoin changes, the more secure and predictable it is. There's far fewer opportunities for catastrophic mistakes. But now it seems like the existential threats to Bitcoin aren't moving so slowly anymore. If anything, they're speeding up, and Bitcoin has to ask, Is conservatism still our strength, or is it becoming more and more of a vulnerability?
Upgrades should take a long time because they should be careful. I think the problem right now is that the quantum threat is not taking amongst the developers behind Bitcoin. I don't think they're taking it as an urgent problem. If you look at the things that are being worked on, the edge case security vulnerabilities, whereas this thing is closer to a systemic issue. And, let's say Jameson Lott thinking by 2030 it's a 50% chance. I honestly think that he's right. I think of Bitcoin as the winner of the last war, and there's this new thing coming, and the developers aren't necessarily equipped.
Speed requires at least some degree of centralization. The faster you move, the fewer people can make these decisions. The fewer people who can make these decisions result in more vulnerabilities or potential mistakes for Bitcoin. So the slowness of development is the price of Bitcoin's independence.
We don't have a CEO, we don't have a group of board members making decisions on what the development of Bitcoin should be or what we should be prioritizing, which is amazing in the fact that we have this decentralized, open source group of developers improving the network for us all to benefit from. But then we also now have to start questioning whether this governance process, even if we can call it that, could actually result in Bitcoin falling behind.
When a developer proposes a change to Bitcoin, that change has to be reviewed not just by one person or company, but an entire community, by miners, nodes, developers, users. Everyone who cares about Bitcoin has a voice, and everyone has to roughly agree before any changes can happen. Now, this process produces incredible security. Bitcoin's history is littered with bugs that would have broken other networks, but Bitcoin caught them before they materialized. Bitcoin's glacial governance process is why. But unfortunately, this also means that innovation can be slow.
Well, this is the really hard thing because there's a long list of improvements that have been discussed for a while that I think would be really great to have on Bitcoin. But the flip side of that is that ossification is a real thing. As the total size of the ecosystem grows, the number of participants in the ecosystem grows, it becomes harder and harder to coordinate amongst people to say, hey, we should do X, Y, or Z. And then, of course, there's the quantum stuff, which is more far out in the future and potential risks to start thinking about, and scalability in general. I mean, Bitcoin is still a very poorly scaling system. And unfortunately, as we have more people who have more and more wealth in the space, there's this natural effect of, well, I don't want you to touch anything. If it ain't broke, don't fix it. And so you have more and more louder and more economically relevant voices that are saying, no, don't do anything, even if it's an improvement, because you might accidentally break something. And I ultimately, I find this totally understandable because I have the vast majority of my net worth in Bitcoin, and so I don't want to break it either, but I am still a technologist and I see many potential future paths forward and a lot of room for improvement. And I certainly believe that if we stop making any improvements to Bitcoin, the rest of the world will continue to change and evolve. And if Bitcoin can't change and adapt to meet new challenges or new needs, then ultimately the solutions that the market will settle on will either be like highly centralized, or they might just be in other systems. And I think either of those is going to be bad for Bitcoin.
Are we still developing and optimizing Bitcoin for its utility, or are we focusing more on its price proposition? Are we so caring about number go up that we're forgetting about what Bitcoin really is about? I mean, it's hard. Do you prioritize the users, which might compromise the miners? Do you go for technical upgrades which will help Bitcoin improve, scale, and provide functionality that it never did before, but may be opposed by the node operators? It's a balancing act, and a pretty tough one at that.
And we've already covered it, but Bitcoin has had these splits before due to disagreements in the governance process. And alongside that, we're seeing thousands of competing cryptocurrencies, again, trying to take some of Bitcoin's market share away.
There's an argument to be made that the altcoin market in general is almost like a test net for Bitcoin, right? So like the stuff that ends up being successful on some like random altcoin or something, like if it ends up being successful, it might make its way over to Bitcoin eventually if it's proven that that is like a good idea, right? But a lot of the stuff, obviously, they're not good ideas and they just go to zero. And so it obviously never makes its way over to Bitcoin. Who knows what applications there might be on the Bitcoin network over the next 100 years.
When Bitcoin decided to keep blocks small and users couldn't transact on-chain as much as they desired, the Lightning Network was developed. Bitcoin evolved because it needed to, not because the governance was fast, but because the community and ecosystem innovated around these constraints.
So do we almost demote or relegate Bitcoin purely to this settlement layer that we build on top of for layer 2s like the Lightning Network, even to layer 3s, layer 4s? Who knows how many layers we can build to try and ensure privacy, scalability, etc. Is that the way that Bitcoin's going to be going? And if so, will that still provide enough revenue for Bitcoin on the main network to really sustain itself and incentivize miners?
But we now need to wonder if Bitcoin is moving away from what it really intended to be.
It's really hard to speculate on Satoshi because they left so long ago, but my general take is that Satoshi was a technologist, more so than an economist, and they did have a number of quotes where they were talking about alternative systems and use cases for doing decentralized stuff. So at the very least, I think Satoshi would be interested in some of these other use cases, whether or not they would be particularly puritanical about what should or should not be done with Bitcoin is hard to say. But in general, Satoshi was very neutral and seemed to be open to experimentation. So I, of course, generally believe that Satoshi would say, hey, this is an open market and people should be free to do what they want.
Here's the trap Bitcoin faces as well. Governments have learned that you simply can't ban Bitcoin. But what you can do is regulate it into compliance, requiring the implementation of KYC, prohibiting mixing services, and prosecuting developers working on privacy tools. In 2024, we saw the crackdown on Samurai Wallet and other privacy tools. The message from governments was clear. Privacy tools are illegal. Bitcoin is not anonymous. If you can regulate the entire Bitcoin ecosystem and the developers working on it into compliance, then you can transform Bitcoin from this censorship-resistant money into a regulated financial asset.
The people who are contributing to Bitcoin also tend to change. A lot of people who get in really early will leave for one of a few reasons. I would say the major reasons that we see OGs leaving is either you become wealthy enough where you don't want to deal with this stuff anymore. You kind of want to move on to other things, much like Satoshi did. Or we see a lot of people get disillusioned with Bitcoin because their mental model of what Bitcoin gets broken for one reason or another, usually due to the shifting narratives or the shifting use cases. So I think that in order to be a really, really long-term contributor to the Bitcoin ecosystem, it really helps to have a fairly flexible mindset about what Bitcoin is and where it may go. Because if you're too rigid on what you believe Bitcoin is, you will probably end up being disappointed at one point in the future. So, especially as new cohorts of adopters and new cohorts of contributors come in, that's going to change the total makeup, the mindset, the perspective of where they are kind of pushing Bitcoin in a given direction. So that's where it gets really hard to say, what is Bitcoin going to look like 100 years from now? Because I expect, we'll be 5 to 10 generations of contributors down the road, and the world will look different. The people who are contributing to Bitcoin will probably be vastly different.
Right now, Bitcoin is making a choice, not explicitly, but implicitly through governance decisions and development priorities. Bitcoin is choosing adoption over privacy and the other fundamental things that Bitcoin initially stood for. We're choosing simplicity over flexibility, and we're choosing stability over speed.
Bitcoin is indifferent to any of these things. Bitcoin will continue on TikTok, next block, and will always evolve and find a new case. And it's just humans being humans that are going to fuck everything up.
The question facing Bitcoin right now isn't technical, it's philosophical.
And while we'd all love Bitcoin to potentially upgrade and improve, maybe a little bit faster than it is at the minute, we need to acknowledge that this is a multi-trillion-dollar asset that we're all probably a little bit overexposed to, if you like that term. But we need to also think long-term. We used to be a species that thought in generations and centuries, not in weeks and months. So it's a balancing act. We need to make sure we're developing fast enough to keep up with the changing world and technology around us, but need to also ensure that we're not compromising the values of what Bitcoin was initially intended to be, and make sure that we can reach the year 2140 still with these values and philosophies intact, while ensuring Bitcoin can continue for generations to come.
Bitcoin was created in the ashes of the 2008 financial crisis. Bitcoin's entire design was built upon a single premise. We don't need institutions, we don't need banks, we don't need to trust anyone except mathematics. So to put that theory to the test, I came up with an experiment.
I'm here at the University of York, specifically the Astro campus, to do something nobody has ever done before. Tonight, we're actually going to be sending Bitcoin to the moon. We're going to be doing a Earth to Moon bounce with radio waves to fire off a Bitcoin transaction. It's then going to bounce off of the moon, come back down to us to actually have a transaction happen with this Bitcoin having hit the moon between wallets. Will it work? Well, judging by the weather, maybe not.
Alas, after 2 constant weeks of UK rain, I could not do the experiment. While my experiment failed, it turned out some guys in Brazil have actually already done exactly this. And it worked fine, which just proves that Bitcoin, in theory, doesn't need anyone to dictate the transactions or keep it functioning. But the bitter irony is Bitcoin's survival pretty much depends entirely on the very thing it was designed to escape. Hundreds of billions of dollars are now held within these ETFs and treasury company balance sheets. Governments are building strategic reserves, and banks are creating Bitcoin-based derivatives.
Everything comes and goes in cycles, and just it so happens that the recent cycle for the past 4 or 5 years has been what I would call the the Michael Saylor led institutional narrative of use Bitcoin as digital gold in order to hedge against inflation. And it is interesting to see that, because that was one of the original narratives back in the day. That's why I got interested in Bitcoin over a decade ago, was as this long-term hedge against monetary debasement, not so much as a payment network, though it is interesting for that reason and many other reasons. And how long will this narrative be sustained? Nobody really knows. Maybe something else will come along and will be the hot new thing. But I still think that we're fairly early in the stages of institutional adoption. So I don't see this necessarily slowing down anytime soon. It's more of a question of do any of these other novel use cases that are being developed become popular enough that they start to encroach on which narrative is really driving interest in the space.
Bitcoin didn't fail at being Bitcoin. Bitcoin's protocol worked perfectly from day one. The code was sound and the mathematics were elegant, but Bitcoin failed at one thing, and that's surviving hostile regulatory environments. For example, in 2014, Mt. Gox collapsed. This was a catastrophe not because Bitcoin's protocol failed, but because Bitcoin's infrastructure failed. Mt. Gox was a centralized exchange holding Bitcoin for customers, and when the exchange was compromised, the customers' Bitcoin were gone. And then came FTX, another centralized exchange and another catastrophe. billions in Bitcoin lost, fraud, mismanagement, systemic risk. Again, the problem wasn't Bitcoin. The problem was centralized custody. And after each one of these catastrophes, regulators stepped in. Custody standards were created, audits were required, and insurance was mandated. These regulations didn't necessarily change Bitcoin, but they did change the infrastructure surrounding Bitcoin. Bitcoin's idealistic vision of being your own bank turned out to be too hard for most people.
I do think it's kind of hard to imagine that Satoshi's vision was that like we're going to have governments and ETFs, and like that probably wasn't really his vision for it, because like one of the main things that makes Bitcoin great is that you own the keys to your, to what you have, right? Like you own the keys to your Bitcoin. So by launching ETFs, by having governments come in, like, I mean, obviously it was a great bull narrative for this past market cycle. But I can't imagine that, like, that was what he originally had in mind.
Here's the thing that's hard to admit. Bitcoin probably couldn't have survived without this institutional adoption. Bitcoin needed regulatory clarity from darknet curiosity to mainstream asset. Bitcoin faced a fork in the road. Remain pure, small, hated by governments, and used primarily by individuals, but growing further and more increasingly banned or marginalized, or the other path, which was to integrate with the institutions, accept the regulation, gain legitimacy, to scale globally and become potentially too big to fail. And Bitcoin chose the second path.
Well, I think it's fair to say that it was more pure when it was a retail-driven asset, but I don't think that means it's a bad thing that institutions and others have come in, because the only way to becoming the global reserve asset or to fulfilling the full vision is straight through Wall Street and institutions. So it's interesting when I hear people make these arguments. You can't really have it both ways, right? You can't be like, you can't believe Bitcoin's going to become a global reserve asset that's going to eat the world, but also be mad when the majority of the world's money or the majority of the world's institutions try to find a way to participate.
We can also say that as a result of this, we've seen billions and billions of dollars more flowing into the Bitcoin space, which has resulted in some price appreciation. The process of number go up allows more people to realize that Bitcoin isn't just a flash in the pan asset, and it is here to stay. Billions of people can now buy Bitcoin through mainstream financial institutions. This is a real fundamental gain for the space.
I think if Bitcoin's ever going to be successful and hit, multi-trillion market caps and catch up and close in and overtake gold at over 25 trillion, then we need institutional adoption, because that's where the vast majority of the wealth is.
The question is, can Bitcoin serve these wealthy investors as well as the unbacked populations simultaneously? Now, it's not like we haven't tried. El Salvador tried to make Bitcoin legal tender, but unfortunately this experiment largely failed. People had to be forced to use Bitcoin, and when given a choice between Bitcoin and the existing money supply, people choose the existing money supply.
It's really interesting because, I track the social interest in the space, and it's almost non-existent right now for retail investors. Like, retail investors don't really care. Most of the general, I think most of the growth has been via institutions and, like family offices and whatnot, like people that they're managing some money. They recognize it's a legitimate asset class and they want to get in. And I think that's kind of where we've been headed for a long time.
Along with this came political protection. Bitcoin became too important for governments to simply ban, and now every country around the world will be studying Bitcoin potentially to implement their own form of a CBDC.
I don't think it matters. I really don't think it matters. We had the most pro-Bitcoin politician you could possibly have. Pro-Bitcoin administration, everyone's holding it, and we had a down year. That tells me that their influence doesn't matter. We had MicroStrategy buying billions of these things. We had all these treasury companies popping up, buying billions of dollars day after day, week after week this summer, and it didn't move the Bitcoin price. Bitcoin's price action is still largely in control of the original holders, the people who got the first distribution of these coins, right? Like the first half of this supply was mined in the first 4 years. Some of that has been bought and sold by those people, but a lot of those people still have it. And a lot of those people will have it for years to come. And you have this whole new class of shareholders, these retail investors, that understand that this is a multi-generational asset.
Bitcoin simply couldn't survive as outlaw money forever. Institutions provided this path to sustainability. But with these real gains came real costs.
The question is what portion of the network that represents and how much control they have to, in theory, with time, change the code and underlying value prop of Bitcoin. If that obviously happens, then we start debating the whole value of Bitcoin again. But I think we're many decades, hopefully, away from that. So there will be different challenges through Bitcoin's life of 100+ years, and different things will be important at different times. So right now it's quantum. I think it's probably going to be mining next. It could be who's dominating the network, and if it is institutions and companies like BlackRock, then will they have power to ultimately influence the code and number of nodes? And those things are intangible right now because they're so far down the line. But you could theoretically say it's a extra long-term risk.
First of all, the financial privacy that Bitcoin was supposed to enable has pretty much all been lost. I mean, you used to be able to easily buy Bitcoin in person from other users until that got shut down. So to try and buy some Bitcoin without having to sign my life away, I wanted to go and use a Bitcoin ATM, which because of regulation meant I'd have to go to another country. So I went to another country, and while trying to buy some Bitcoin at an astronomical markup, I was then informed I needed to upload my documentation and pass a background check. Bitcoin was supposed to replace banks and governments to bank the unbanked, but unfortunately we're just trending towards being another asset within the existing system. A considerable amount of Bitcoin is now held in institutional vaults and centralized custodians. You don't necessarily own your Bitcoin, you own the promise of a Bitcoin from a centralized holder. We've unwillingly recreated the banking system that we were really trying to escape in the first place. We're once again back to trusting institutions with our capital. And along with this comes the growing demand for derivatives. Wall Street issues Bitcoin futures and paper products that float on top of actual Bitcoin. And because of this, we get leverage. And this recreates the exact problem was designed to solve in the first place: fractional reserve banking, opacity, and systemic risk. Bitcoin was supposed to be verifiable, immutable, transparent money, but instead we're now seeing a large quantity of Bitcoin now in unverifiable paper promise form.
If the derivatives become a problem, the humans using those derivatives are going to get flushed and Bitcoin's going to continue on and it will be forgotten. But we've seen every FUD narrative, whether justified or not, eventually just be solved with time, right? I mean, the environmental FUD, China FUD, you name it, you've been through only for criminals FUD, and eventually it'll be, oh, it's now only for institutions, and that will become FUD, right? So it's just, I think it's the natural evolution of Bitcoin.
When we look at Bitcoin's history, we see something interesting in the market cycles. Bear markets do something that bull markets simply don't. Bull markets bring the interest, the excitement, the new money. They expand the base, but the bear markets that we see do something maybe a little bit more important. Bear market shifts coins from those with the lowest conviction to those with the highest conviction. In bear markets, we can sell. People who bought Bitcoin as a get-rich-quick scheme give up. But people who believe in Bitcoin's long-term vision hold or even accumulate further. Every bear market has strengthened Bitcoin's conviction base. Every cycle has moved Bitcoin from speculators to believers, and this is healthy. It's the market doing exactly what it should, removing doubt and consolidating into strength. The thing is, you can still hold Bitcoin yourself. You can manage your private keys, verify your own coins, but institutional custody is still more convenient for a vast majority of users. So people choose convenience over self-sovereignty.
The reality is a lot of humanity is, I don't want to say lazy, but they're happy to choose convenience at the cost of compliance. Do people even want to be their own bank? Do they want to take care of their own transactions? Do they want the risk of potentially sending to the wrong address and losing their funds? Is this a user experience issue for Bitcoin? Maybe Bitcoin's best chance of success is acting in the background, potentially being the source of a Bitcoin banking system. But again, this is in spite of everything Bitcoin was meant to be. This is against the ethos of why Bitcoin was created. So again, it's this balancing act of making sure we have this ability to still have unique individual access to our funds, to be something against the system Bitcoin was created against, but also allowing Bitcoin to become mainstream, to have this adoption that so far we're not really seeing.
And this is perhaps one of the deepest reasons for Bitcoin's transformation. Not necessarily institutional pressure or regulatory requirement, just human nature. We took the most censorship-resistant, decentralized autonomous financial system ever created, and we immediately rebuilt institutions around it because it was easier. Bitcoin was supposed to eliminate the need to trust institutions, but instead Bitcoin created new institutions that people have to trust.
I mean, it's more user friendly to people that, like, I mean, I know a lot of people in real life that now have bought Bitcoin that never otherwise would have, because they never could be bothered to own the, to track the private keys. They're like, you know what, I wasn't going to do that, but if all I have to do is go on to some brokerage and just buy the ETF, like, I'll do that. So I think it's opened the doors to people getting exposure, but it also, to some degree, has seemed somewhat antithetical to what Bitcoin was originally supposed to be.
Does anyone really know how their phone works? Do we need to know how it works? I mean, it works. That's all that really matters. Should we be aiming for the same for Bitcoin? Should we be demanding people run their own nodes, ensure its decentralization and open source nature? Or is this too much to ask?
Could this have been different? Well, potentially, if we'd chosen to reject institutional adoption and kept Bitcoin small and private and potentially hostile to regulation, but that Bitcoin would unfortunately be a lot smaller, a lot less secure, and more easily attacked by governments and individuals. The path Bitcoin took towards institutional legitimacy was probably the only path available to us. Not because it was ideologically correct, but because our survival depended on it.
I like the Darwin quote that it's not the strongest or most intelligent species that survives, but the most adaptable. And I think that applies to money and Bitcoin here. So Bitcoin is incredibly intelligent, it's incredibly strong, and its encryption today has the most powerful computer network behind it in the world today. But if it can't adapt, it's going to get left behind in the dust by quantum supercomputers and other threats in the long term. So we have to be able to adapt the code. Code doesn't last forever, and it needs to be upgraded. And it's just really important that we find a better way to do that and get consensus on that through time as required, obviously without compromising on the core principles of Bitcoin.
So Bitcoin, which rose like a phoenix from the ashes of the 2008 global financial crisis, as a way to really stick it to the man, stick it to central banks, politicians, fiat debasement, terrible monetary policy, is now almost reliant on politicians and regulation. We're watching federal rate cuts like Bitcoin depends on it. We've given up self-sovereignty, if that's a word, individualism for corporate rulings. And is this good for Bitcoin? Are we over-reliant on acceptance from a traditional banking system which we were designed to overthrow just for short-term number go up gains? Are we giving up something truly fundamental to the thesis of Bitcoin just to suit those that make decisions that Bitcoin was created in spite of? Right now, there's over 1 million Bitcoin sitting in Satoshi's wallets, and one day they're going to move. Over $100 billion worth, and over 5% of the circulating supply of Bitcoin are just sitting there, a ticking time bomb with the greatest fiscal incentive ever for someone to steal them.
Now, this isn't because Satoshi will one day suddenly decide to spend them, but because technology is moving fast and quantum computing is moving even faster. And when they do arrive, quantum computers, whether that be in 5 years or 25 years, these coins will be cracked. The cryptographic problem that protects them will become solvable. And when that happens, Bitcoin will face its first genuine existential threat. This story is a different one from every other one that Bitcoin has faced so far. Bitcoin has survived through these regulatory bans, the market crashes and government wars, security breaches, but Bitcoin survived those through resilience and passive adaptation. But Satoshi's coins are different. Their vulnerability requires active defense. Bitcoin must fundamentally change how it protects value, or Bitcoin must risk losing a substantial quantity of its supply. Now let me explain quickly how quantum computing threatens Bitcoin. Now, I'll admit I'm definitely not an expert in the space, but very simply, Bitcoin security depends on cryptography. Specifically, Bitcoin uses elliptic curve digital signature algorithms, or ECDSAs, and this algorithm makes it mathematically hard to forge a Bitcoin signature. You need to know the private key, and without that, creating a valid signature is computationally impossible. For traditional computers, these type of signature breaks would take millions of years. But quantum computers operate very differently. They can solve certain mathematical problems exponentially faster than traditional computers. Specifically, they can solve the discrete logarithm problem, the math underlying ECDSA, within a matter of minutes or hours.
You know, I remember back in, I think it was like 2017, people were asking me back then, like, what about quantum computing, you know? And I remember thinking like, oh yeah, like that's reasonable. And like I was a grad student, so it's not like I was that removed from that world. And I had worked some of the national labs, and I knew that people were working on it. But at the same time, if I had let that scare me away from investing, you know, I would have missed out on, you know, essentially a 100x move.
So how much Bitcoin is really at risk? Not every Bitcoin is equally exposed. Early coins, including Satoshis, were often sent to public keys directly, which is P2PK. And those keys are sitting on the ledger right now, plain as day. And for those coins, a quantum computer is almost a skeleton key to access these. However, for more modern addresses, which is P2PK8, for example, the public key is hidden behind a cryptographic hash, which is only revealed when you try to move the money. So this gives us a window of protection. But once you reveal your key to make a transaction, a fast enough quantum computer could intercept it before it's confirmed. Roughly 25 to 30% of all Bitcoin have had their public keys revealed through transactions or are using incompatible early addresses. These coins can be stolen by anyone with a sufficiently powerful quantum computer, and Satoshi's coins are in this category. Now you might be thinking, well, quantum computers don't exist yet. They're decades away. Why do we need to worry right now?
The Q-Day thing, I think, really will come down to how slowly or quickly a cryptographically relevant quantum computer gets developed. And that could be anywhere from a year from now to never, which is one of the reasons why this is such a difficult topic to talk about. But I think in general, if a potentially strong enough quantum computer appears like less than 5 years before we start actively coordinating some sort of defense and some sort of upgrade around it, I think there will be massive negative ramifications, because there will be large amounts of Bitcoin that end up getting liquidated, essentially resurrected and brought back into circulation. And then like there's many different paths that you could go down, depending upon a number of different variables of whether or not there even is an optional opt-in quantum resistant option for people to move to. If there's not, then that's the worst case scenario, because in that case, even a quantum attacker would not just steal the money and sit on it. They would be incentivized to liquidate it as quickly as possible, because they don't have a way to secure it for themselves. But in general, even if there is an opt-in option, there's probably still going to be millions of Bitcoin out there that will be re-entering circulation, and that will just cause, I think, market panic and a massive price collapse for at least some period of time.
The thing is, nobody knows for sure. The timeline is genuinely uncertain at the minute, but uncertainty is the enemy here, because Bitcoin requires proactive migration, not reactive adaptation. Whenever quantum computers arrive, if Bitcoin hasn't migrated to post-quantum cryptography, Bitcoin loses. It's that simple. The public keys of hundreds of billions of dollars of Bitcoin become exposed, and those attackers with quantum computers can begin stealing coins and potentially start dumping them on the open market, resulting in catastrophic price collapses.
I imagine if there is a quantum event, it will be a binary event. We'll just wake up one day and Bitcoin will be hacked, and maybe we'll have a God candle down minus 40 or 50%, who knows? But we'll kind of like find out about it. I don't think we'll kind of like get a rabbit dropping trail of hints towards maybe this has happened. It's just kind of like there's a pre-quantum Bitcoin cracked world and there's a post-quantum Bitcoin cracked world.
Here's why quantum computing is really different from Bitcoin's previous problems. When governments have tried to ban Bitcoin, again, Bitcoin's protocol didn't have to change. We continued running regardless of political pressure. When miners and developers fought over the block sizes in 2017, the Bitcoin governance was of course tested, but the issue could be resolved by disagreement. We saw Bitcoin fork and the network split, but quantum computing genuinely is different this time. Bitcoin cannot survive by splitting away, and we can't survive by just ignoring this threat. Bitcoin must coordinate a protocol level migration that the entire network has to accept.
I think the point now is that we need to focus on a singular solution, and so I'm talking now more and more about BIP 360, the Bitcoin improvement proposal to upgrade Bitcoin to be quantum resistant. It involves new signature methods, etc. The code still needs to be finalized. So the pathway really is getting the Bitcoin core development team to finalize that code, test, and recommend it. Then step 2 is get the nodes to move towards consensus on this and accepting it. And then finally from there, it flows through to exchanges, utilizing it as well. And really miners just follow liquidity at the end of the day. So the first key steps are Bitcoin core development team, finalizing shipping, and then getting nodes towards consensus. So I'm hopeful we can achieve that next year.
This is unprecedented for Bitcoin. While the migration itself could technically just be a soft fork, the necessary step of deactivating these old and vulnerable addresses acts as almost a forced migration. Bitcoin has always adapted through backward compatible upgrades, but the quantum migration will require something considerably harder. We'll need a unified consensus under existential pressure to fundamentally change the rules of Bitcoin ownership.
So when do we start preparing to fix this? Well, now.
The good news is post-quantum cryptography does exist. Researchers have developed cryptographic algorithms that are believed to be resistant to quantum computing, so it's definitely within the realm of technical possibility for Bitcoin to migrate to post-quantum cryptography. The process would work something like this. First, Bitcoin would implement new address types using post-quantum algorithms alongside the existing addresses, and this dual implementation of old and new would run simultaneously. And once we had consensus, Bitcoin would incentivize migration from these old addresses to the new addresses. Miners might prioritize transactions moving coins from vulnerable addresses to these post-quantum addresses, and once this migration was complete, Bitcoin would leave these old addresses behind, leaving their network fully quantum resistant. Now, this is all theoretically possible. Like we've said many times, Bitcoin is a software we can adapt as needed, but executing this requires something Bitcoin has never really had to do at scale before, and that's global cooperation.
Yeah, this is definitely the most significant threat Bitcoin has ever faced and the most urgent action item that we need to solve on. So it still baffles me that it's not getting as much attention as it needs on that front. We had the block wars back in 1718, and we know that these things can take time to get consensus on. Everyone will have different opinions, and that's okay, but that's why it needs to be moved on and talked about more aggressively, really, at this point. So there's about a 30% or a 1 in 3 chance that without any code changes, Bitcoin will break in the next sort of 3 years. That percentage risk grows every day, every year to about 50, 60% in 5 years' time. So we must solve this soon. And the implementation times, realistically, we're talking 6 to 12 months just to finalize the code and get consensus in a best case scenario, I think, because there's a lot of people that need to come on board for this. And then from there, the implementation times are unknown, but between 6 months and 2 years. That's because 6 months is pretty much the best case scenario in terms of the network traffic flow through and speed of Bitcoin, given the block size, number of users with wallets and funded accounts on it. Up to 2 years is because the signatures for quantum are up to 100 times bigger at present. Now, we can obviously optimize that with the code and hopefully get it to be more lightweight, and that's implementation time can be faster, but we really are still looking at somewhere between 2 to 3 years to roll out this implementation fully across all active users in the Bitcoin network.
If the Bitcoin community can't achieve consensus on post-quantum migration and execute sufficiently, then the alternatives unfortunately aren't great. We could, for example, implement a soft fork that limits the spending from these very old addresses that haven't been active for an incredibly long period of time, which would result in Satoshi's coins being spent at an incredibly slow rate once they are eventually cracked by quantum computing.
I would love to see some sort of covenants functionality. Covenants basically meaning the ability to place restrictions on the future flows of your Bitcoin, and that can have massive ramifications anywhere from improvements to layer 2 protocols and their security and their scalability, to improvements in vault style security so that you can actually encumber your coins so that if they get moved, you have a chance to actually take them back if they've been moved without your permission.
We could wait until after Q-Day and potentially perform a network rollback, which many people look towards Bitcoin as the truly immutable ledger, but we've done this before. Back in 2010, when an integer overflow bug created infinite Bitcoin, the community rolled back 53 blocks by removing the invalidated creation. In theory, Bitcoin could do this once again after quantum theft had occurred, but this rollback destroys the core principle that Bitcoin truly is immutable. Another option would be almost the nuclear option, where Bitcoin could implement a mechanism that transfers all of these old addresses and coins to unspendable addresses, essentially burn them so no one could ever have access to them again.
Yeah, I'd burn them. So this is probably the more complicated discussion point and probably the hardest one we're going to get agreement on. So there's no wrong or right answer for this one. That said, about 20 to 30% of Bitcoin supply is publicly exposed, so will be taken by a quantum machine with certainty unless we do something to the code. So that includes Satoshi's coins, which are about 125 billion worth, but the total of all these publicly addressed is about 400 to 500 billion. So depending on the price of Bitcoin, obviously, but we're talking more or less $500 billion. So that will be taken. And one of the key, I would argue, the number one value prop for Bitcoin is its hard money supply. And that's all hinged on the inflation growth rate of Bitcoin, which is now half that of gold. So if we have potentially 20 to 30% of supply unlocked at some point within the next 3 to 6 years, I think that's going to be a really big trust issue and massively collapse the hard money supply argument, and people almost see Bitcoin as a laughing stock. So at that point, I think we're going to have a massive bear market regardless, because you're going to have 20% of supply plus hitting the market. So price will come down a lot at the least, but the whole philosophy of Bitcoin could be compromised in that point. Obviously, there will still be some recovery out of it, but I think the better pathway is if we agree, okay, under either BIP 360, the quantum upgrade, or another one, we say, if you have not migrated your coins from these addresses and wallets to quantum proof resistant signature wallet within X time, or by X block X, so it could be 12 months, it could be 24 months, then those coins will be burnt. So that's, I think, the approach we should take. It will make the asset harder, and it will protect against this quantum hack, which will be coming.
But this creates a massive philosophical hurdle. It effectively means that Bitcoin can be seized property. If the network decides that it can burn coins to save itself, what stops further governments or controllers or maintainers of the network deciding what coins and addresses can be burnt and censored? What if we see terrorist coins or dissident coins? This sets a precedent that destroys the idea of self-sovereign ownership. And the final option would be to simply do nothing, allow the market to figure out themselves, allow these coins to be cracked and stolen and dumped on the open market. But again, this creates a very undesirable scenario, not just for those who've potentially had their coins stolen, but for everyone else who has to witness millions of Bitcoin hitting the open markets.
I would say it's more likely, maybe 2/3 more likely, will choose for the steal. Those coins will be stolen, and then rather than burnt, because it's kind of against the ethos. So yeah, that's the road bump that's coming. Even if we upgrade the protocol, there's no guarantees. If we upgrade the protocol before Q-Day, if it's more likely that those Satoshi's coins, or the lost coins, there's around 4 million, 3.7 million lost coins. Yeah, I think we got to prepare for that.
And while quantum computing is definitely the primary external threat to Bitcoin, it's definitely not the only one. If we're thinking well over 100 years into the future, look at the development speed we've seen in artificial intelligence in just the last few years. As Bitcoin grows and as artificial intelligence grows, we'll see an increased participation via AI in Bitcoin's economy. This is just theoretical, but it's not irrational to imagine a future where AI might find some game theoretic exploits in mining or the fee market infrastructure that humans would never spot, and optimizing the network in ways that are mathematically efficient and useful for their own use cases, but potentially detrimental to human uses. Again, as discussed in the previous episode, there is the regulatory risks as well. Governments may not be able to actively ban Bitcoin, but they can continue to regulate it into compliance and uselessness. And of course, if we're getting way out there into the next century, there's the risk of solar flares and cosmic events. Statistically, Earth is way overdue for a major solar event that could damage a significant portion of global electronic infrastructure. If a Carrington event-level solar flare hit today, it could disable satellites and widespread power infrastructure. This would, however, affect all digital systems equally, not just Bitcoin uniquely, and at this point in time we may be fighting with sticks and stones rather than talking about what the best money to use is. Now, there of course is an argument that all of these could negatively influence existing infrastructure, the traditional finance and banking system.
I'm way more worried about like the nuclear codes and the Department of Defense if we have a quantum than the Bitcoin network, personally. Like if Bitcoin's at risk, literally so is every system that's internet-based anywhere in the world.
However, I don't think this is a great stance that we should be taking as Bitcoiners, to just think that maybe they won't attack us because there's bigger fish to fry. Bitcoin is the forefront of technological innovation and fiscal and monetary evolution, so to sit back passively and react to the problems rather than try and proactively prevent them is against the ethos of Bitcoin in itself.
Yeah, you can simplify it to the fact that, yeah, well, everyone's got a problem, so we should do nothing. It's like inaction is not a solution here. But the bigger point is that Bitcoin is the biggest honeypot in the world. It's the only financial network where you can literally steal value and have 24/7 liquidity to sell it. And there's plenty of willing transactors to do that. You couldn't do the same with dollars. You stole massive amounts of money, you're going to get wires blocked, all sorts of other actions taken to curtail that. So it is, once it's taken by a quantum machine, it can be liquidated pretty quickly or relatively for that size of money. And it can then fund pretty much the last decade of all quantum research globally. So that's the first point. Secondly is TradFi institutions and platforms. They are more or less quantum resistant because we all use 2FA. So you've got a password and you've got a 2FA key, and you can't do multiple or infinite simulations on a 2FA key because you get locked out of your account. So that's what most people forget, is that the encryption on these existing platforms is actually more robust. And in most cases, they're already upgrading to quantum proof algorithms and NIST approved algorithms to stop quantum attack. And then, of course, even if you do get hacked, many of these institutions are going to refund you your money as they do today. So we just don't have those luxuries in a decentralized platform like Bitcoin, which is built purely on trust in the code. And once trust in the code breaks, trust is hard to gain and easily lost. So we really need to solve on that. So the threat vectors are very different. And then, of course, Bitcoin's elliptic curve cryptography is even weaker than most traditional RSA encryption used by all these platforms. So there's 5 or 6 different fronts where Bitcoin is the weaker target, and it's also the biggest honeypot. So if you've got this capability to break a bank or to break massive crypto wallets, I think you can go after crypto wallets because it's going to be easier to liquidate. And it's a first mover advantage, right? If you're the second person to break Bitcoin, it's not going to be any value if the money's already gone.
And outside of this, there's going to be countless threats that we can't even imagine today.
I think the one thing that Bitcoin has never really experienced is a recession, frankly. I mean, it experienced one briefly in 2020, but it hasn't experienced anything more major than that was longer lasting. And so I'm very confident that it would survive something like that. But I think there's probably a lot of people that are not that confident. in that statement. Like, I think there's a lot of people that would probably take the other side of that bet and just say that it'll all just go to zero in the event of a more prolonged downturn. I think that, it will survive, and I think that once it does, it will provide a lot more credibility to the idea that it's not just going to die. I mean, think about all the narratives there have been over the last like 15, 16 years as to why it would die. And it is ultimately survived everything that's come at it so far. The only thing it hasn't really had to experience is a prolonged recession, but I don't even know when that's going to happen. Maybe it happens in 2026, maybe it happens in 2036, right? Like, I have no idea. So I would argue that. And I think one of the ways it ultimately does survive is that people learn their lessons and they stop throwing their money into useless meme coins. And they, we kind of, the thing that I think you could argue, the thing that makes everyone in crypto the most alike, right, is it's kind of all centered around Bitcoin, right? So if everyone can kind of come back to the roots, which I think is what's been happening over the last 3 to 4 years, and we've seen Bitcoin dominance go up that entire time, right? As I think people come back to the roots, they find out, okay, this is what's important. This is what we're here for. It can survive as long as we recognize that.
Let's zoom out and look to how much the world had changed in the 131 years prior to Bitcoin. In 1878, we barely had electrical lights. We didn't have telephones, cars, aeroplanes, radios, or televisions. We didn't have transistors or computers or digital technology of any kind. In that 131-year period, humanity went from steam engines to circling the solar system, from communicating only by voice to communicating instantly with anyone on Earth. From basic arithmetic to supercomputers, the speed of technological change in the 131 years prior to Bitcoin was nothing short of extraordinary and truly incomprehensible to someone from the late 1800s. Now imagine in the next 100 years' time. Quantum computing will likely be trivial at that point, and AI will have advanced to levels we can't even imagine today. And this rate of change is accelerating further and faster than ever before.
We'll get through quantum, yeah. Everything else is fine, other than the whole supply being centralized and then kind of rugged by, a nationalization event. Governments, basically breaking the experiment of Bitcoin. After that, it will challenge gold because gold's ledger is corrupted because of technology. It's going to have an inflation bug due to exponential technology, grabbing gold out of the ocean, grabbing gold out of asteroids. If we're talking 100 years into the future, that's got an inflation bug.
But here is one interesting insight. In the 131 years prior to Bitcoin, monetary technology had stayed relatively the same. We'd still used physical cash in 1878, just like we did in 2009. Monetary evolution had essentially frozen while technological evolution had exploded. Bitcoin was the first time this had truly fundamentally changed. Yes, we had credit cards and debit cards, and yes, maybe fiat currencies weren't backed by real-world commodities anymore, but the actual functionality of money hadn't altered at all drastically in over a century. Bitcoin was created because the world needed monetary innovation to catch up with technological innovation, and we have filled that gap. And Bitcoin will continue to fill that gap. We will adapt to quantum computing, we'll solve the problems that are ahead of us, we'll adapt to AI economies and whatever the next 131 years will bring us. And this isn't because Bitcoin is perfect, but because Bitcoin represents an actual alternative to centralized monetary control. And now that that exists, people are starting to understand that decentralized money is a possibility, and no amount of quantum computing, AI, or solar flares is ever going to change that. But the hard truth is, Bitcoin's survival depends not just on code, but on the commitment to Bitcoin.
The hope is that the network is used to the point that there's still incentives for people to continue to, verify transactions, right? To continue to do what they're doing. I think the hard part is that it's hard to know what that'll look like in 100 years, right? This has also often been like a question that I think people have wrestled with, is like, well, what happens when all the Bitcoin is mined and whatnot? But I think the idea is, by that point, theoretically, if Bitcoin becomes what we think it will become, then ideally it would be self-sufficient at that point. And there would be enough incentives just with the network, right? Just with the network, even though there's no more Bitcoin being mined. I mean, at the end of the day, none of us can fully know what's going to happen. I mean, none of us will be alive, honestly, by that time. So it's not like we can even sit here and verify whether we're right or not. But maybe our grandchildren can.
It requires people who care more about Bitcoin than they do about short-term profit incentives. Bitcoin's early adopters had this belief. Satoshi definitely had this belief. The early Bitcoin community and original cypherpunks, again, believed in this. They built Bitcoin when it was worthless because they believed in the vision. But can we say the same for today? Does the current Bitcoin community have this unwavering belief?
Apathy. This is what I've said for a while. Like the biggest threat to Bitcoin is people stopping putting in the effort and caring about continuing to improve and maintain the system. So this is why I'm never particularly upset or worried about controversy in the Bitcoin ecosystem. Controversy is a good thing because it means that people are trying. They're trying to do something. They're trying to improve Bitcoin in one way or another, and perhaps for various reasons, what they're trying to do and what they believe is an improvement is actually considered an attack or a degradation by other people. But ultimately, it means that at least people are trying to continue to evolve and discover a consensus for what Bitcoin should actually be. This is the ultimate question, I believe, is what is Bitcoin? And no one can answer that question. No authority can say, Bitcoin is or should be X, Y, or Z. The most that we can do is to understand, this is an open, collaborative project, and everyone has a voice. Not everyone's voice is the exact same equivalent for a variety of different reasons. But if you want to contribute, no one can stop you from contributing.
So ultimately, will Bitcoin survive until 2140 when the last Satoshi enters circulation? The technical answer is yes. Bitcoin's code will continue to improve and adapt and overcome all of the issues in front of us. From a governance perspective, it's a little bit less certain. Can Bitcoin's community come together and actually coordinate to solve these problems? Bitcoin's future is not determined by technology. Bitcoin's future is determined by people.